be a boomer when you're a millennial.
Dude, I mean, statistically, I think you're a boomer. Or do you fall under millennial?
I fall under millennial.
Okay, well,
I don't understand how I'm a boomer.
you're just a boomer at heart then.
Why? Because I like dividends?
Yeah.
You like dividends
technology.
too.
I am boomerish in that perspective as well, sir.
Zoom
Are
in.
you enjoying the dividends flowing into your account?
Yeah, bro. I love the $3.50 I get every 3 months. It's fucking great.
Every 3 months. You are so underplaying this. It's unbelievable. Say that with a straight face.
Yeah.
Exactly.
All right, everybody. I hope you are now just funneling in from that nerds channel talking about stupid finance things to the fun channel where we talk about whatever we want and protest Tanner's authoritarian regime on the Bootleg Weekly.
Now, do we want to avoid that certain word again, just in principle?
No, I think if we're going to talk about the 5-stock portfolio, we have to talk about that word. We can avoid another word, though, if we can still play that game. But
see, I don't know what word we're trying to avoid, so it's not really fair.
How about
more fun?
How about Steve's favorite?
You have to identify the rules of the game.
What's that?
You have to identify the rules of the game.
Steve's favorite stock type.
The one that pays you
from here on, not this episode. You don't mention that word.
We cannot say that word.
And next time, Steve, you get
actually
the word.
I also want to add another word that we can't say. It's actually 2 words. It's Steve's favorite. It's actually the name of Steve's channel.
Yeah, that's fine.
It's
man! Alliteration.
Listen,
2 words start with A. We can't say those either.
Tevis loves generating income. Okay.
And let's add this one to the list too.
I don't even have to say the word. I can come up with other phrases: generating income, distributions,
playing cards,
trading card game, Charizard.
Yeah, we can curse now. Tanner is in the chat. He's locked out. He can't join us. He can't hurt us anymore. That's right. All right. So let's start off. I think we had a couple of topics. Steve, you wanted to start with the Dow Jones news. So shall we start there?
I didn't say which ones I wanted to start. I just said most of them sucked.
That's the only one that you approved of in the entire list that I had prepared for you.
Yeah, we should set some parameters. You should send a Google Doc to the 2 of us.
Mm-hmm.
That way we can all know what the topics are. Instead of you just putting notes on a private doc.
Okay. Well, how about you join?
Don't worry, I'll start when I'll send it around so you don't have to. Don't worry.
How about you join the Twitter group where Roy and I shoot ideas back and forth?
Okay. Do you know how involved that is? To actually check that?
Is he not a boomer? Is he not a boomer?
I did not see a link in my email, so I'm like, the link must be in Twitter because that's what these guys are using.
Oh,
I'm busy. I don't have time to be checking that stuff.
Yeah. Okay. Cool. So let's just get started. There's news that Amazon is going to be joining the Dow Jones as early as next week, and they're replacing Walgreens. Steve, one of your favorite types of stocks.
Because it pays a distribution.
Oh, fuck off. You almost said it.
What? I didn't say the word. You didn't say I'm not allowed to say distribution.
I know. No, well played. What do we think of this?
I think they want the Dow to rise.
Yeah. When was the last time a stock was replaced in the Dow? Because I don't think I've ever heard of. Well,
don't they rebalance every year?
Rebalance as in switch stuff out?
Yeah. I think so.
Dow additions and deletions since 1929. What an auspicious year.
So
2020 is the last time. So Exxon, Raytheon, and Pfizer were added. And Salesforce, Honeywell, and Amgen were removed.
Wow.
No, other way around. They actually kicked out Exxon, Raytheon, and Pfizer, and they added Salesforce, Honeywell,
which is crazy that they kicked Exxon out of the Dow.
That is weird.
Is Chevron in there?
I just think it's so restrictive. Like Dow is still at 30, right? It's 30 stocks. Like that's so small to me.
It is. Yeah, 30 Dow components.
Is Amazon the only Magnificent Seven in the Dow now? I think so, right?
Let's see.
Google's not in there. Apple's not in there. Meta's not in there. Nvidia's like sure as shit not in there.
Yeah, Apple's in there actually. So for some reason, Disney, Microsoft's in there.
Oh, Microsoft's in there?
Yeah.
But so I guess my question with this is like, doesn't this? I think my problem that I had with the Magnificent Seven, or not a problem, but just the pointing out the trend, is that it becomes so heavily weighted and skewed towards just the large market cap companies, where like there's a bigger distribution or bigger delta, let's say, between small caps and large caps. Oh, by the way, TJ, look what I'm wearing. Because I saw TJ was in the chat. Sorry, totally lost my train of thought. Where like the Magnificent Seven just keep rising and rising, and then everything else just underperforms, and it seems as though the indices are just doing so well, and all of these investors that are just passive, like ETF investors that just go into S&P 500 or the Qs or something like that, it's so heavily concentrated in the Magnificent Seven. And then this is going to make it way more concentrated, like, because now if you're investing in the Dow, for some diversification, versus the Qs, let's say, you now have Amazon and Microsoft in here as well. And so there's just going to be a higher correlation. Is that?
Yeah, but why wouldn't people want to invest in the best companies? When you look at how profitable these companies are, just think about it for a second. Between Apple, Microsoft, Alphabet, and Meta, what is that? Roughly 250 billion of profit a year?
Yeah, I read
between those five companies.
Something I read something on Twitter. Remind me, guys. If you tally the earnings from the Magnificent Seven, it equals like some 100-something countries in the world. The gross domestic product. It was something ridiculous. But yeah, they're amazing, powerful companies. But I mean, the Dow is not filled with just that. I mean, Coke is a good company. Disney here or there, Nike, fine. They got Boeing, like. Okay.
Yeah, but the other thing you got to remember is
the Dow has a Dow, so it's really 29.
Tech has always been exciting, and it's what younger people gravitate to, and it's what the fund managers are gravitating to because it has the most earnings power and pricing power. So it's not surprising that they are the largest components of the indexes, or that's where capital is gravitating to.
Yeah, that makes sense to me. You can always, the Dow doesn't rebalance. That's the one issue with the Dow. They just Dow it right up, but the other indices will rebalance from time to time, so they can alleviate some of that.
I mean, do people even care about the Dow anymore?
Probably not.
Yes, boomers like you do.
No, they care about the S&P.
Exactly. Like increasingly fewer boomers are going to care about the Dow if we're going to add fun tech stocks in the Dow.
The Dow's supposed to be boring, and Amazon, I don't find it boring. I think it's a good, solid company.
So that's my whole point. Like, if I look at the indices, I know that on risk-on days, the Nasdaq's going to outperform, and the Dow's
Uber is joining the Dow.
Uber.
It's coming across my screen now on trending news on Seeking Alpha. Amazon and Uber be added to the Dow. What world are we living in that Uber is going into the Dow?
JetBlue
S&P Dow Jones Indices also announced that Uber would replace JetBlue Airways. Ew.
Yeah.
I mean, it's an upgrade.
What? I don't know, man. So this is the thing. It's just like the indices won't even. I don't know. The indices won't even mean shit anymore because they all are going to be so closely mimicking each other that there's going to be no variance between like. I know on my Webull, for example, I have one watch list, which is all my dividend.
Oh, what's the freaking punishment?
All my distribution paying stocks. And I have the other one, which is all my growth stuff. And on any given day, if my growth stuff is down, then the other stuff is up. And if the other stuff is down, the growth stuff is up. And there's like a big discrepancy there because the market's either risk on or risk off. But right now,
you know what the discrepancy is? You came up with this game. You started the rules and you lost.
Roy started the rules.
No, you did.
Okay, fine.
You came up with the words. That means you made the rules.
All right, so now I have to donate to a charity. Does SoFi count as a charity for me to donate my
No.
extra money into?
PayPal maybe, but no. Yeah,
Um,
charity of your choice. We
And I
didn't
don't know
specify the
that-
amount, so amount of your choice.
And honestly, I don't know if it's a fair statement that less people are going to care about the indices, because when you think about total market funds and S&P 500 funds, those are probably, and we can throw in target date funds also. Those are the largest funds that capital gravitates to in retirement funds. And that's where many people are making their investments.
right.
Like if you just pull up the biggest funds, pull up SPY, pull up VOO, pull up VTI. I think VTI has over $1 trillion in assets. I could be wrong on that, actually. Hold on. Yeah, 1.47 trillion in assets. Yeah. Why does everybody think I'm the oldest millennial? How have I grounded somebody? I don't have kids.
I'm actually
Also,
slightly older than Steve.
This is kind of funny and very emblematic of this podcast. I'm not punished for saying fuck, but I'm punished for saying dividend. So,
Ooh.
Oh,
Said
no.
it again.
I'm gonna pay the charity. Charities are a write off, man. It's fine.
Yeah.
Okay. Do we want to move actually now to talking about this concentration thing?
Magnificent Five.
Yeah. Okay.
Tevis is Magnificent Five. Take it away.
Yeah.
Fantastic
Okay.
Five.
I wouldn't put it that way, but I had a chat with Steve. When was it, Steve? Last night? The night before? And I was just like,
no, it's probably yesterday.
Yeah, I was just like, hey, I have a couple of stocks in my portfolio that have underperformed. I bought some stuff in 2020. I bought some stuff in 2021. The market has fallen. And then throughout the fall, I've averaged down on what I'm highly convicted in. But as these stocks have fallen, the story has also changed throughout, where the growth rates are not what they were. And as a result, I'm just at that point right now where I'm looking at the opportunity cost as the market rebounds. And I'm saying, okay, do I want to lock in a couple of losses on some positions and double down and triple down on some of my higher conviction picks? Or do I just want to hold and wait for some of these things to rebound? Steve also offered the other alternative, which was you can also average down on some of these stocks. But the reason why I don't want to average down on some of them is because the growth story has changed, right? And so that's sort of where I am right now. I did make some portfolio changes today. I cut some stuff and I added more to SoFi. And honestly, that felt pretty good because I just feel like, yes, going really concentrated into SoFi has outsized risk for me. But at the same time, it's the thing that I know the most out of all of my positions. And I want to have a heavily correlated portfolio with where I pay my highest attention to. So if I'm reading up about SoFi, every little, micro piece of news about it, I want to be able to have that correspond to my portfolio weighting. And a lot of these companies that are, position number 5 through 15, I don't even look at them on a very granular level because I just don't have the time. I don't have the mental capacity to look at them. And so the thing that I was proposing to Steve was, hey, I kind of want to shave all of this down and go into a 5-stock portfolio of just the stuff that I care about and that I'm still bullish on. And how did I pick the 5? It's the companies that I've been averaging down on in 2022 and 2023, which are Tesla, SoFi, Unity, Pinterest. And I was also thinking for a 5th position to build up Celsius, because right now it's just a very small position. And this is a very timely super chat. Thank you. And this is Celsius. I had somebody comment to me because I actually poured it in a glass, and she was like, "It tastes really good, but why does it look like that? It looks like some radioactive." So
A little dehydrated there.
yeah, exactly. So anyway, so that was my whole take. 5 stocks, and then I was thinking to myself, well, of those 5, my weighting is again going to be corresponding to my conviction in them. So I thought, maybe I might just say fuck it and do a 2-stock portfolio, Tesla, SoFi. And then I thought to myself, well, Tesla still has margin compression that they're going to probably see this quarter realized. They're probably not going to be taking, being on the up and up until the end of the year. And so that's why I was thinking, okay, well, why don't I just go all in SoFi? But that's like probably the extreme example, because it just kills my soul a little bit to sell Tesla. Anyways, that's sort of where my head is going, just free sort of stream of consciousness in terms of what I'm thinking. I am going to cut a bunch of positions just because I just feel like I can make that up way quicker into SoFi than I can on these positions themselves, actually waiting for them to rebound. Thank you, Matt.
I'm not going to discuss anything in too much detail that we discussed, but what I said was, if it was me, I would look at how much was in a specific position that I was on the fence on, and I would just look at it as, forget about the money that you're down, look at it as new capital. Is the capital better in that position, or is it better somewhere else? Because it's really hard to look. I got positions I'm down on that I'm not selling for a very specific reason. Alibaba.
So here's the thing, Steve. And like, I think that, again, there is a case to be made about just holding stuff through. But I think that if I'm not selling this position, I should be adding this position. And something like let's say a Corsair, for example, this thing had a huge boom when everybody was forced to stay home. And then they had supply chain issues to fulfill that demand. And then as a result of that, when everybody, the lockdown mandates ended, then everybody the business fell because everybody had already reset, like they'd bought new gear, new merch, and they didn't need it. Like the cycle had restarted. And as a result, Corsair came in, they reported last week, they had 6% year-over-year growth. Yeah, but the valuation metrics, they're super cheap. And I'm like, okay, well, I think that I would probably add to them at this point because they're a value play, but I would do it in a corresponding weighting to my portfolio to say, okay, this is a value play. I don't expect 50% growth rates. I can expect single digits, maybe low double digits, but that's what I'm paying for right now. The problem is I paid for double-digit growth rates back when, and now I'm getting single-digit growth rates, and I just don't want to have more money on the line.
Yeah, and the problem for Corsair is, and I hate using this, but it's so right and so fitting for this. What's the growth story? Like, what's the story behind it?
Right.
And the problem becomes they're in a very competitive industry. You got Micron, you got Logitech, Asus, Republic of Gamers, MSI. Like, there are so many great companies out there. And I don't know that there's a huge market on an upgrade cycle for Corsair. And while the valuation looks very enticing, I don't know. It's a difficult one. But,
right? And this is the other problem. And I think Rufus just nailed it. Every time I get access to net new funds, I add to my SoFi position. And this is tongue in cheek, but it's so true. And the reason is because I read up on SoFi week in and week out. I know about them the most that I know about anything else. And so whenever I'm like, oh, I should add to Corsair, I'm like, no, I don't want to do that, because SoFi is still undervalued and it's still going to grow. And I know so much about it. And so I can monitor that basket really, really closely, so to speak.
I don't hate this idea because you are more diversified now.
Through the distribution portfolio.
Nice try, Steve. I personally prefer the super concentrated portfolio. Most of my assets are, I guess, more than half are just 401k ETF type things, 403b, that I let them do their thing. That's my safety net. And then I have a position of 6 names that I invest in, and that's it. I'll probably be dropping one this year and adding maybe 2. And my threshold is, if I have more than a 5% allocation, I need to follow that closely. I need to read through and look and listen to every earnings call, any major investor day, anything like that. I need to look for the headlines. Anything more than 7, maybe 8 would be just a lot of work for me. If it's a 1% position, I don't care. It's whatever. So in my portfolio, the only one that's under that is Tesla right now. So I guess Bitcoin miners, if you want to count them, I don't. But the way that I handle that is, when I lose conviction on something, if the thesis actually changes, then I look for an exit right away. And so last year at this time, I was in ChargePoint. ChargePoint was maybe my 5th largest position. It wasn't super large, probably 4th actually. And right around maybe a little bit later than this, Ford came out with that announcement where they said they're going to actually adopt the Tesla charging standard. I'm like, all right. I've been, they weren't the first company to do that, but I'm like, okay, if Ford's doing this, all the others are going to follow. I am getting out of ChargePoint, and I sold right around $10. I don't know where it's at right now, but it's not good. It got beaten down. But the thesis changed. I put those funds into Palantir, and it did pretty well. So personally, I think that if you've lost conviction to the point where you're not willing to put it in, you're not sure about the thesis even working out, you're just down, and that's the reason you're holding it. It's probably better to sell, to take those losses, to realize those losses, and put it into something where you have a stronger conviction where you can keep your eye on. So, yeah, I approve. The only thing that I don't like is that you sold Palantir, and I will never forgive you.
It's the same reason, right? I think, this person nailed it. Like, it's a comfort level with the company that I feel most educated on. And, let's take Palantir out of it because we're going to fall into a rabbit hole of like AI. But like,
I'm messing with you.
Yeah, but you made a profit, so you can't hate that.
No, absolutely. And I feel like the reason why I don't have FOMO is because I know that if that earnings went the other way around and they didn't report 17% and they reported, 14% or whatever, and it fell back to 10, I would be like feeling horrible because I was like, oh, like I feel like I made a short-term gain on this thing that I don't really know super well because I don't have the time or the mental effort to learn the intricacies of a 1% position for me. You know what I'm saying? And so I'm like, well, I would rather dedicate that time, even if it makes a little less, let's say hypothetically, I'd rather dedicate that time to, concentrating to something that I know.
So I got 2 questions for you.
Shoot.
Outside of your distribution portfolio, do you own any of the big tech stocks? I know you own Tesla, but do you own Apple, Microsoft, Alphabet, Amazon, or Meta?
Apple's the biggest position in the distribution portfolio. It's about
outside of that. Yeah, outside of that portfolio. No. TJ, you'll be happy to know I made 2.5% or 2.41% on my money selling covered calls today, going out a month.
Nice.
Yes.
What was your second question?
My second question is, would you consider adding something to your concentrated portfolio?
Well, okay, so here's the thing though, right? Like, I don't know, because I made that post on Twitter and everybody's like, oh, add SMCI, add Nvidia, add whatever, add an AI stock. And I'm like, okay, this isn't a fucking, brainstorming session for what I should add, guys. Like, I'm just letting you know these are the stocks. And the reason why I wasn't mentally, I guess, open to adding new positions was because, again, I would have to do an outsized level of research on those positions. I'm not like Pinterest is probably going to underperform a lot of these, but I don't know what.
I think Alphabet's going to be a dark horse this year.
Sure. I mean, I could just concentrate completely into, Google, Facebook, Amazon, and Apple, and then I could probably do really, really well. But then what's the point? Why don't I just buy like the Qs and just be done with it?
And that's a great idea. More people should probably do that because investing in index funds is probably better for most people than buying individual equities.
I mean, the reason I have the growth portfolio is because I'm kind of a gambler at heart, dude. I like the game aspect.
Do you have any capital in index funds at all? That's a no. If you have to think that hard, that's a no.
No. Well, yeah, but like super small.
We need to have an off-topic conversation outside of here.
Yeah, you might want to rethink that.
This is why people are like, Steve has scolded people before.
No, he's right though. Like, I think everybody should have at least a part of their position like dedicated to that. I had a young friend that I talked with once this week, once last week. He has just been doing individual kind of investing, but he doesn't have time. He doesn't have the attention. And so I was like, okay, let's have a talk. We had an
Have you ever ran the numbers, Tevis?
About what? Like going
just investing in just a boring S&P fund. Have you actually done the math?
No, I know I'd probably do better.
We're going to do it together.
No, I've done them before. I'm not.
No, we're going to do the math together.
This is very important.
It's very important.
Listen to the boomer.
All right, we're going to start with no money. Okay.
Sure.
We're going to go over
By the
30
way,
years.
as you're about to go on this, my dad had this talk with me when I was 12.
Your dad's a wonderful man.
He is.
Mine didn't. So
$1,000 monthly contribution. We'll start 500.
okay.
500 a month for 30 years. You put in 180 grand at 9%. You will have 851,000. To get over $1 million, I think it's 600.
There you go.
And you put in 216 grand. Costs you 600 a month. The S&P right now, I believe, is 10.32% over the past 30 years, average annual return.
And you may not have like a Roth in your state, but yeah,
you can just do it. You can do it in a taxable account. It doesn't matter. I mean, if you were to kick that up to 1,500 a month for 30 years, 2.5, and if you have 40 years to invest and you do that, 6.3.
But Steve, like this, what you're showing me right now in my brain is my distribution portfolio. Like that's it occupies the same space in my head as like this is the boring stuff. But
it's two completely different things. The distribution portfolio is to generate passive income. It is not for capital appreciation. It is to generate income that gets reinvested to generate more income and keep the cycle going. That way, when you retire, you have distribution income coming in around the clock in addition to your other assets.
And if you do something like this, I mean, you're betting on the American economy for one, and then that gives you the freedom to be able to invest however you like. If you want to do like degenerate plays, it's fine. You retire with $6 million if you're able to put $1,500 away outside.
I mean, look, even maxing out is what now, like $19.50 a month around for 30 years, starting with nothing. You'll retire with over $3 million if you can max out for 30 years.
And this is American dollars that he's doing it in. So
I mean, and think about it this way: most people are not going to retire until 65 because that's when healthcare benefits kick in, and retiring before 65 is incredibly expensive. So if you do from 35 to 65 and you're able to max out, statistically, you will end up with over $3 million just from doing that. And it comes right off the top. It's not like it's leaving your account. You never see that money. It becomes an autopilot. You're paying yourself off the top.
And you may, like if someone's starting out, so like Tevis, if you're just starting out, you might be like, I don't want to do 1950. I want to do my own little thing.
Yeah, do 500.
Do 500. Do $100. Like so my friend that I was talking to, I think he's doing 500 a month. He has things like invested in Dogecoin and some other different. I'm like, that's fine to do, but do the 500 first. Put it in the Roth. Increase it when you can to such and such. He's got a new baby and everything. He's young. He's got time. I'm like, dude, the biggest asset you have is time. And you just put it. He's like, I don't know what to do. The NASDAQ or the S&P 500 is like $250 in each. Just forget it even exists. It's the easiest thing. And that way, it really frees you up to super concentrate on what your core stuff is.
Yeah,
you just let the economy do what it needs to do.
It is a backup plan. It is a safety net. And it makes everything less stressful when you're investing in individual equities because you have money going into the overall market.
And I'll say one thing too. I often say, I'm like 80% Palantir. Well, I'm 80% in my individual portfolio. That's not 80% overall of my net worth. So, but it allows me to do stupid things like that. It's great.
Yeah, but like the stupid things you do is totally going to offset the gains that.
If you're correct.
What do you mean if you're correct?
If you're correct, there's no guarantee you're going to pick winners.
Yeah.
No, that's what I'm saying. The stupid things you do is going to offset the gains that you would get in your passive income because I'm going to do stupid things. I'm going to lose all my money on fucking betting on Unity.
That's the reverse way of looking at it. You have the other money going into this as your safety nets. You can do the stupid things. And if you wash out, you're still fine.
Guys, this combo started with me going all in on SoFi. Okay.
Yeah.
We're trying to save you from yourself.
I'm just trying to say like red or black, and you're just telling me like invest in an ETF. Like
no,
we're too far apart right now, guys.
If you had like that this contribution into the S&P 500 or the NASDAQ, and you're just doing that. Then if you wanted to do 100% on SoFi, it's like you're going to still be able to retire. Worst case scenario, like it's your insurance basically. I know it's boring. Insurance is not super exciting, but dude, it gives you the peace of mind. So that if something stupid happens and SoFi goes to $3, you're not like, oh my goodness, like this is terrible. I'm wrecked. I'll never be able to retire. That happens. Like we lived through a cycle where just things went down ridiculously, and who's to say that won't happen here? So, but if
you can do very good in individual equities, and you can make a lot of money much quicker than investing in an index fund, but it doesn't hurt to have the index fund as your backup. That's all.
Mm-hmm. It's insurance.
Absolutely.
And why are we talking about red or black? We should be talking about playing craps where you can maximize your odds.
That's the best thing you've said all night, baby. Like that's yeah, absolutely.
I mean, I've taught you my playing strategy, have I not?
On craps?
Yes.
Oh man, I played with TJ. That was so much fun in Vegas. I don't think you. I know.
Oh my God! Hold on. Jesus Christ!
Now we're getting into the meat of this podcast.
This is like
you got your veggies. Now is the time for the ice cream. We're gonna do craps strategies.
All right. So this is the crap strategy. Okay. I want to get a good picture. Hold on. We're going to get a good picture.
All right. While you do that, let me go get a little drink and I'll come back.
A little drink, he says.
More Celsius. He's trying to pump that stock. That's what he's doing.
He is trying to pump that so hard.
Yeah, exactly.
They don't even have distributions.
There you go.
Flavor? What flavor?
This is the orange. Here, listen to this.
I want one now.
Go pump my call options, baby. Go buy them.
You love call options. Oh my God. You love call options.
So call options are like going to Vegas. And there's two types of people that are in Vegas. There's people that have no money at all except for what little bit they have, and they have to do the 10x or whatever. Otherwise, they're not going to be able to survive. And you see those broken people. Most of them don't make it. And then you have people like Tevis who have plenty of money, and if he goes and he loses 5K, it's like, I mean, it kind of sucks, but it's like no big deal. Like he's going to recover from that, no problem. So exactly. You want to be like Tevis. You want to be like yourself in Vegas.
All right, everybody, this is not financial advice. Steve, please continue, sir.
Okay, so we don't play the dark side. Okay, if you're with me and you go to a craps table and you put money on don't pass, I'm walking away.
Yeah, fuck that. You're an asshole if you do don't pass.
Like you play don't pass when you're by yourself and you don't know anybody and you don't care about being
like online, maybe.
Like craps is supposed to be a game of fun with your friends, but there's a way to maximize the strategy. So here we go. We're gonna start with the pass line bet. Okay.
If you're gonna tell me 6 and 8, I swear I'm gonna.
No, with that rookie stuff. No.
Okay.
No.
Okay.
No.
All right, but let's make this quick because I actually
we're gonna make it quick. We're gonna make it very quick.
Again.
So pass line 7 and 11 are the winners. 2, 3, and 12, you lose your money. So what do? Most tables, the table minimum is 10, so we're gonna use 10 just to make the numbers easy. Any crap pays 7 to 1. So for every $10 you put on the pass line, you put $2 on any crap. If 7 or 11 come out, you make your $10 on the pass line and you lose your 2 on any crap, you're still net plus 8. If a 2, 3, or 12 come out, you lose your pass line bet, but you win 7 to 1 on your $2. So your 10 goes away on the pass line, but you get paid 14 on any crap, plus your 2 stays up. So you're net plus 4. So either way, you're a winner, no matter what happens there. You come out ahead, no matter if it's a crap that comes out or 7 or 11. Now, if a point comes out, you lose your 2 on any crap, okay? And let's just say a 6 comes out for the point. We're going to buy the 4, 5, 8, 9, and 10 because a 7 has a 16.67% chance of coming out. But when you buy the rest of the numbers, you have a 66.67% chance of one of your numbers coming out.
All right. Hold on. Let me stop you right there. Let me remove this. Esteban, I love you, but 30 people dropped the stream from the time we put up the craps table until now. This is the strategy, period. End of story. All right. That's
I thought this was Bootleg Weekly where we could talk about anything.
That's the story. You just blow in the dice and then you just fucking roll them, baby.
No,
like it's a hangover, okay?
It's a mathematical system.
All right. So what are we going to talk about next, Roy?
The stock that Roy is going to
drop. Sora and Unity. Since Unity is one of those that's in your portfolio. So Sora came out.
To me because they don't make money.
OpenAI? Not yet. I mean, but the thing is with competition, if competition comes in and they don't make money, as long as they can stay alive, which they can, like they have an infinite money glitch basically right now.
Never made money though.
Let me give the backstory here, okay?
Okay.
So Unity is a company that IPO'd back in 2021. Basically what they are is they are a platform for developers to leverage to build their games, predominantly on mobile, but they are the preferred platform for all of these AR and VR experiences. So essentially the bull case for Unity, and there's a lot of reasons why developers prefer them, but developers prefer them mainly because they have an easier user experience and a bigger library of content. And so it's essentially, it allows people to ramp up very quickly on the coding language, on the development language, and build their own mobile games. So think of like the Candy Crushes, the Temple Runs, like these little games that you can play on your mobile device, when you're like on the subway or something. That was likely built on Unity because it's easy to do. Unreal, which is the main competitor, builds like super photorealistic experiences. So think of like the God of War game on PlayStation or something like Elden Ring, for example.
Wait, that's not Unity?
No.
Unreal Engine's not Unity.
No, they're two competitors.
What company owns Unreal Engine?
Epic Games. They're private. When we had our conversation about what private company we'd like to invest in if they went public, that's actually what I should answer.
They're the ones that have Fortnite as well. Anyways, so these are the two competitors in the space, and they're diversified. They have different parts of the market. For Unity, a lot of their clientele right now is being leveraged by enterprise. So like 9 out of the top 10 auto makers are using them to model out new vehicles. So let's say I want, whatever the new 2024 Ford Focus is going to look like, I can render it all on Unity and I can play around with it to just actually do the design components on Unity itself using the engine. The long-term bull case is AR and VR. And essentially it's very simple. Apple and Meta right now are competing with one another to see who will win market share on the hardware layer of this AR VR ecosystem, right? Are you going to use a Quest 3? Or are you going to use an Apple Vision Pro? The software layer is going to be predominantly Unity because that is the platform that is most, like that's the engine essentially that all of these apps are going to be built on. Somebody, like all these apps are going to get built. That ecosystem is going to get populated. You're going to have an app store for AR, VR, because it's going to have different gestures. It's going to have different interactions, right? Like there's a completely different space, right? I mentioned this before. You're essentially having the software untethered from the hardware, right? You can get its spatial computing. You can get up, you can put a window anywhere you want. It's not limited to the hardware, like how big is your screen size? Hold on one sec. Sora, on the other hand, let me just set the stage and we can have an open combo. Sora, on the other hand, is essentially OpenAI, which released ChatGPT, recently released Sora. And basically what it is it takes entire scenes and it renders. You can just ask it to build you something. So like, build me somebody in a spacesuit in the middle of the desert climbing into a rocket ship in the style of J.J. Abrams. And it'll like have a photorealistic like trailer essentially for you that looks like it's filmed. And the way that it does that is it essentially renders everything as like one collective scene. The All In podcast, we're talking about this. But essentially there's, I don't know, I can go into the difference between these two because people online were saying, is generative AI through Sora going to eat Unity's lunch? And I don't think that that's the case. I think that there's a really clear opportunity for collaboration there. But Steve, let me answer your question first, and then we can dive into that.
Yeah, so so the first question is, what would stop Meta or Apple from building their own engine for their stuff? That's the first question, and not using Unity.
Right. So why? Well, okay. So this platform is not necessarily like Apple is going to build their own engine to build Apple apps. It's the App Store, which has tens of thousands of different apps from small indie developers. They're going to leverage Unity. So it's not necessarily like Meta is going to have a monopoly on all the apps that are on their Quest 3. It's going to be independent developers that build those apps, and those apps are going to be built on Unity.
Okay, fair.
And they're
Next
familiar
question.
with that platform, so it's a pain in the butt for developers to shift to try to figure out something new if what they're working is working great. Unity almost broke that with their old CEO, but he's gone.
Yeah.
Have you gone through the financials?
Yeah, they're not profitable. So basically Unity just axed their CEO. Their CEO was probably the biggest bear case to the stock. He was super short-term thinking, super like, let's abuse the hell out of the developers that use the platform. And now they put in the CEO who used to run Red Hat, and he released a note on the Q3 earnings. And it was very much like, hey, we plan to increase the operating leverage in this company to reduce the expenses. There's a lot of different focus areas. We want to streamline to the core value proposition, and we want to create shareholder returns and actually, deliver the value for this platform. It sounded really promising. I don't know. He's only had one quarter, similar to like Alex, Chris, and PayPal.
So bring up my screen for a minute. And I need to read more into them.
Sure.
But to me, just looking at the numbers off the bat, I see multiple red flags.
Sure.
First thing is, take cost of revenue out of it. Your operating expenses is $520 million in Q3 when they only generated $544 million in revenue. I mean, they're spending almost all their revenue on just operating the company, and then you add in the cost of revenue. They've never been freaking profitable, which is fine. I'm okay with them never being profitable, but these numbers scare me, considering EBITDA loses money all the time. And then you look at balance sheet. The next problem, besides the growth slowing, which was not great, they are absolutely diluting shareholders to not draw down on that pile of cash, which I'm fine with because that's a smart play, but dilution's not great. And having negative tangible book value is not good, considering they have over $3 billion in goodwill that they're just willing to write off if shit hits the fan. Like, to me, that's a problem.
Yeah, no, absolutely. And the financials don't look great. Look, Unity had an exodus in terms
they have a fair amount of debt too.
Yeah. So very much a company that's like, you could argue a busted growth story. They had an exodus in their clients because the CEO, like the thing that got him fired was essentially he, changed the pricing strategy around, and a lot of people got pissed off and they started boycotting. When the new CEO came in, the first thing they did was they announced cuts. So Unity had cuts in January, going along with a narrative of like, hey, we're going to be increasing or optimizing that OpEx. Last year, they also did a big merger with IronSource to basically have an ad platform on their platform, so that if I'm building a game, let's say, and that game has in-app purchases, I can also build that all through Unity, right? And so that game makes money, and when that game makes money, Unity as a platform takes a rake. So essentially, that was a big other reason we had dilution. This company has been acquiring companies left and right. They acquired Weta Digital for assets. They acquired SpeedTree. They acquired so many different smaller companies on their growth trajectory. The positive thing about them, Steve, is that they own the market share. They own like 60% plus of all mobile apps, essentially all mobile games. And so the thesis is, if that translates to that AR VR space, then obviously that's going to unlock a lot for them. Now, obviously, we have to see how the CEO is going to navigate. Their earnings is in about 2 weeks. And so we're going to have more information then. But essentially, if this company can consolidate into their core value prop, and if they can continue to reduce those expenses, then I think that, I think.
So let me ask you this. And they're not apples to apples, but they're somewhat similar. if you're going to invest in that space, why wouldn't you go with the Take-Two that we know GTA 6 is going to be the biggest freaking game there ever was?
That's
we
not
know
that
this.
though. That's
It's not apples to apples, but it's similar.
not really.
Well,
Because
both video game space, one's mobile, one's not.
So Unity can be used for mobile games. It can be used for other platform games. It can be used to make movies. It can be used to digitize like the cars and the modeling and everything. So it's a very flexible platform. Like they're mostly mobile games as far as their biggest portion of revenue. But the other thing that Tevis mentioned, he mentioned the layoffs, but these are substantial layoffs. They're 25% layoffs. So
yeah,
they're not small.
The benefit of the platform is its ease of use, and in order to get that, they give up some benefits in terms of like how the depth of how you can go, like the details. That's why you would go with Unreal, for example, if you're building like PlayStation games like GTA and such, where you need that high resolution and you need that like all those different mechanics. But the thing is, if you want to place a bet in the AR VR space, there's only a couple ways you can do it. You can either buy the hardware providers. In terms of the actual software layer, Unity is like the only game in town to a large degree. Apple name dropped them essentially at last year's WWDC when they announced the Vision Pro as like a software partner for the Vision Pro that they're working on. Meta, Facebook tried to buy them outright in 2016 when they were still a private company. And so basically, I think that, with Facebook having tried to buy them in the past, Zuckerberg basically said, Unity is going to be crucial to this strategy in an open letter to employees back in 2016. And with them going head to head with Apple, I just think that the focus right now is on the hardware side of things. But once that stabilizes, more and more and more apps are going to be built on this thing. And Unity is going to be the backbone to a lot of that experience.
I'll look more into it.
So going back to Sora, my concern was that, if you can just use a large language model just to type up and you get this fantastic scene that's done, in almost no time at all. It has to be rendered, but that's that can actually eat into the TAM of Unity. Now, where I didn't realize or wasn't thinking at the time, and somebody let me know, and I verified this as well. So I use ChatGPT quite a bit. They have DALL-E integrated in there, and so I'll generate an image, and I'll be like, "Well, that's a nice image and all, but actually, I want you to remove this and change this to that." It will not edit the image. There is no capability to do that in DALL-E. There is no capability to do that in Sora. Nothing with ChatGPT. It will create something brand new from scratch, using the original inputs with a slight tweak. And so, what you have to do right now with Sora is you port it over to Unity or something like Unity, and there you can make the edits. So as long as that continues, as long as there's no edit feature that actually is functional for developers, there's really no threat.
So this is exactly, and Roy, I love that you're sort of thinking the same way. This is exactly how I picture that collaboration to work, because essentially it's a discrepancy into how these scenes are rendered. Unity operates in two aspects. It has a 3D space where you can drop objects, and then it has the physics engine. So, if I swish the water in this can, how does that behave to mimic physics in game, right? Or in a scene, in a movie, whatever. Sora, along with all of these AI-based models, have been trained on entire scenes. And so essentially Sora can't distinguish the actual objects in the scene. If you say, generate me a robot walking down the street, and then you say, oh, change the robot's shoes to blue, it's going to generate you an entirely new robot. The background of the scene might be a little bit different. And the reason why is because it renders the entire scene. It does not create a 3D space with individual objects whereby it can change a single aspect of a single object in isolation. The reason why is compute space, right? Like it would be way too much compute for it to break out everything. The benefit is that they have an API where Unity can essentially port into OpenAI or vice versa. And if you can translate this Sora entire scene rendering and then translate that into a 3D rendering in Unity, then you can go in and you can modify specific aspects. And that, I think, is where the secret sauce will be.
Yeah, I we'll have to see. I was trying to think, and I'm like, it would be actually very difficult, I think, for OpenAI to implement some sort of edit feature within Sora. I think maybe they'll try to do that, and with Dolly as well. It's going to be a while, and even if it works, it probably is not going to be as seamless as just porting it over to Unity.
Yeah, I think like just bringing it again higher level outside of the super granular, just to make it relevant for people watching. I think Unity is going to report earnings in a couple of weeks. Their new CEO is like what I want them to talk about is I want them to address AI, and I want them to address exactly how they plan on incorporating this and exactly how they plan on collaborating with all of these tools out there. Because right now, to the uninformed sort of general, retail investor, a lot of them there's FUD out there that Sora is going to eat Unity's lunch. And I don't think that that's the case. I think that it's a perfect opportunity to build on top of Sora and have this collaborative aspect that actually takes Unity even higher. They need to flat out address that, though, on the call and explain how they're going to do that. But I think the other point to mention is that, WWDC is coming again. It's going to be in June. Apple is going to probably talk about their, new software updates. They're probably going to talk about what the second version at some point this year, what the second version of the Vision Pro looks like, how it behaves, what it has. And they're probably going to, at some point or another, name drop Unity again, similar to what they did last time. And so I do think that a close partnership and collaboration with Apple here within that ecosystem is definitely a huge tailwind for Unity, especially because Vision Pro is heating up more and more as a viable competitor to Meta. Don't forget, this is the very first V1 alternative that they have. Yes, it costs a lot. Yes, people are returning it. I don't care, man. The reviews were positive in terms of the hand tracking, the eye tracking, and the functionality for it. I mentioned in a previous episode that if you want full immersion, you would go to Quest 3. But if you want spatial computing where you don't have full immersion, you have that pass through, you go to Vision Pro. And so the point being is that there is going to be a very large addressable market for Unity to play in on the software as more and more independent developers get into this space.
Yeah, I'm interested. It's on my small list, not short list, that I may initiate a position in. We'll just see how they execute. I'm going to give it a little time. I don't think there's a mad dash or rush. They might go up a lot, they might not. But if Unity's thesis actually plays out, there's a whole lot of upside. And if it doesn't, they could stay where they're at for a good long while.
Yeah. I mean, this was a stock that went to, 220? It peaked out. It IPO'd around like 80. By the end of the IPO day, it was up to like 100. It went up to 220. It fell back to $20, and now it's at like $33. So I think the biggest bear case that they had was their CEO being so short-term focused and so short-sighted. Getting rid of him, especially with someone like Roy, I think if you're interested in Unity, I urge you to take a look at this letter. I'll actually throw it up on screen.
Is it the letter U?
No. Hold on.
Yeah, the reason why I wasn't even interested in Unity before, even though I was thinking about the thesis, was the old CEO. When he went out, that went on my active watch list.
So this was on November 9th. This is basically like a couple weeks after they got rid of the CEO. So think of like Alex Chris coming into PayPal. This is the first time, this CEO had an opportunity to address shareholders. And he basically talks about, some of his past here. After a month at Unity, I believe our key product is the engine. With a combination of iron source, so for the ad side of the business, essentially, so on and so forth, we have a significant opportunity to accelerate revenue growth, improve profitability, and increase free cash flow generation going forward. We're doing too much. We need to cut some of our portfolio and address, these opportunities. They had cuts, 2 months later. And so essentially, he essentially talked about, okay, how are we going to generate more shareholder returns? How are we going to generate more value as a company? How are we going to realize the hidden value of this core product that we have? And that's, I think, exactly what I, as an investor, wanted to see from this new person coming in, because there's a lot of uncertainty with that CEO coming out. And so essentially, similar to Alex Chris and PayPal, this is going to be the second quarter now that the new CEO is going to be essentially leading. This is going to be a first quarter that he has fully under his belt. I want to see that vision, and I want AI to be a part of that vision because I think that that's what the market is looking for as well.
Yeah, makes sense. I'll be watching.
All right, cool. Anything else to chat through that you guys wanted to touch on?
We probably don't have time for it tonight, but at some point we need to talk Google. You guys are both bullish. I am not at all. So that's maybe a future discussion there. There's
could
always
you not be bullish?
I think that they're going to be the worst performing out of the Mag 7 over the next 5 years.
I mean, Tesla's in the Mag 7, so
no, over 5 years, Tesla will be fine. Like over the next few quarters, I don't know. But I just there's two companies I keep actively adding to, and I can talk about both of them because we don't have that rule. SoFi, I've done 5 or 6 weeks in a row that I've added. And then Tesla, I've added usually every other week. It's slow adding, but I have a goal to get that up. I'm very bullish on that company long term. Short term, I think you're right that it's probably going to go back down, but I am terrible at finding bottoms, so I'll just add slowly at that. But yeah, SoFi, I'm addicted, man.
Yeah, I'm the biggest Tesla bull you'll find. I know Steve is also in Tesla, but I'll also be the first one to call it a spade, and to say that, with margins bottoming out this quarter, I could totally see the stock falling even further than this. I mean, it's hit that technical support, so it's staying up from above, I think 185 or something like that. But if it breaks below, I can totally see, 150s, 160s. I think it's a great spot to be accumulating, Roy. Because one thing we know about Tesla, like, it's quiet until it's not.
Here's my problem with Tesla. I'm only in it for the bot business. If the bot business ends up not freaking happening, I'm out. I think people are making way too big of a deal about the car business. My personal opinion, I have no facts to back this up, but if I was a owner of a Tesla, I would be so mad right now because he has cut the cost of the car so much that the resale value is destroyed from where you're into it for. Absolutely destroyed. I live in one of the most heavily populated areas, and Tesla is not the most popular car by a long shot. By a long shot. It's a great company, but unless FSD comes out, which you're going to need government regulation for, and it's not just on the federal level, you're going to need state and local regulation in order to use it. Unless that gets passed and that becomes a licensing play, it's going to be very hard for this to justify the multiple unless there is real progress on the bot. And I mean, the bot, I really do think is going to be bigger than the car business. I really do. Like, much bigger.
Yes, but don't overlook the FSD. Eventually, that will get to the point where they're ready to push that out actively. I don't think it'll be at the $12,000.
They can be ready to push it out tomorrow. We're not going to be able to use it for 5 to 10 years.
The thing is, Steve, that I think, and I hope I'm wrong on this, but I think Tesla is going to be somewhat dead money until the end of the year, or at least until the second half of the year, because of exactly what you guys mentioned. With them lowering prices, that lowers margins. With lower margins, analysts are going to project linearly to say, oh, this company's in decline. Bears are going to attack on top of that, whatever. The other thing to consider is that this entire shareholder compensation lawsuit is not going to get resolved until the end of the year. They appealed, but that appeal is not going to get essentially resolved until the end of the year. And then FSD is like a whole big question mark. Like, when will regulators approve that? I think that by the end of the year, a lot of these things should be cleared for Tesla, like the shareholder stuff, so that they can figure out their new compensation plan. Number one, FSD. Number two, it's more likely towards the end of the year to get more approval. And then number three, we're going to be entering about the time where we get a hype cycle around the new model. So Model 2 or something to that effect, like the small $25,000 car. They've teased it. But, I don't think that they're going to be announcing it anytime soon. It's probably going to be towards the back half of the year. And so that's why I say it's probably dead money until the end of the year, because of all of these catalysts sort of being very tightly packed.
And look, I'm going to buy more on the way down because I think the bot thing is going to be huge. But Tesla scares me. Share my screen real quick. So, Roy, really look into Google, because when you look at what the analysts are calling for and the amount of EPS growth that they are projected to have,
Oh yeah.
48 analysts are saying $6.76 this year, 46 analysts 781 next year. It's trading at 18 times next year's earnings.
For a reason.
Not for
Look
a
at-
reason, for
Yes,
no good
for a
reason
reason.
whatsoever.
There is a
Look
great reason.
Roy,
We'll do this next time.
look,
Like
look,
it's
look
going to
at
take
the
a whole thing.
look at the revenue growth.
I know.
And look at the freaking profits.
Oh yeah, they're
Ridiculous.
printing
Off
money.
the chart.
But you know what company this reminds me of right now? Honestly,
You can say
PayPal.
Apple?
PayPal.
But you're bullish on PayPal.
I am bullish on PayPal. You know why? Because they got rid of their freaking management that was just leading them astray.
Ooh, okay.
I own both. I will sell PayPal so much quicker than Google. Google's generating $70 billion in free cash flow.
No, what he's saying
They're
is
buying back shares left and
Pichai as
right.
an operator.
Yeah, Sundar Pichai is he's very, very mediocre. There's a lot of issues with Google we can get into in a later time.
Cool.
Bottom line is, I think Google will be okay. I don't think you're going to lose money on Google. I think you'll make money. But compared to the rest of the Mag 7, it is going to be the worst performer over the next 5 years. I thought maybe Apple might have given it run for the money, but I actually believe in the Vision Pro. So I no longer think that's the case. I think it's going to be Google is going to be a laggard. It's going to look like it's cheap relative for Mag 7, but it is that way for a reason. There's more than Sundar Pichai, but yeah, we can get into the full thing in a full episode.
I have a lot more Amazon than I do Alphabet.
Good.
And I think Alphabet is going to be a bigger winner than Amazon.
Let me ask you guys this. Do you believe that both Amazon and Alphabet are going to issue dividends this year?
You just said it again. I think Alphabet will, not Amazon. Amazon doesn't generate the profitability to do so. And we need to see how their CapEx is going to come in this year. But Alphabet has so much cash on hand, and they're generating $70 billion in free cash flow. And when you look at what the market did with Meta, they would be silly not to issue a distribution.
Yeah, I think they might, and I agree. Amazon will not issue the disbursement yet.
Fuck both of you guys. I'm like, we're not going to play this game anymore. Okay, I'm going to be donating way too much to charity at this rate. Yeah.
I mean, you're the one that said it, not us.
It's great.
Yeah,
and you even picked all the Steve stuff.
I know.
I haven't said any of the Steve stuff. I think they're both going to be issuing distributions. They have to follow suit, and I mean, Meta has told a very clear story of what happens to those companies once they do. It's still on the up and up, and people can be arguing like, oh, well, Meta's overvalued, but at the same time, a lot of analysts are going to be upping their price targets because I think consensus is like, 510 or 515 or something, and Meta's already knocking on the door of 500, and those people are going to look really stupid because that's a 12-month price target. And so I just think that it fits a wider narrative for Meta because now all of these cash flow investors are going to also have open reign to buy it. And I think that's why I bought Apple in my distribution portfolio.
There's a big debate among value investors or income investors. I would say a debate in both camps about what is better return of capital, buybacks or distributions. And this is what I'm going to say on both of them. Look at PayPal and look what their buybacks has gotten them. Nothing. They have bought back so much of the company over the past 5 to 6 years, and it's gotten them nowhere. Okay. I love buybacks because it means my equity is worth more. My equity represents a larger portion of the EPS and the revenue, but sometimes the market doesn't care. You look at Altria, sometimes the market doesn't care. At least with a distribution, even though it's not as tax efficient, it directly benefits shareholders and allows them to either take the cash from the disbursement or utilize the disbursement and purchase more shares on a quarterly basis and increase the amount of income generated going forward. So I think that Google has to do it.
Yeah, Steve, but like for every PayPal and Altria, there's an Apple that buys back a huge portion of their float every year. and that has led to tremendous outperformance over the past decade.
You got to remember, though, Apple is much different than Alphabet for the simple fact that they are a cult that has a built-in audience that will buy their products no matter what. And you look at the iPhone,
That
it
doesn't
is
matter.
probably the most important product out there.
It doesn't matter because
It does.
It does.
It does. It so does.
Let me just finish.
Vision Pro
reason-
would have never gotten off the assembly line if it wasn't for Apple. Like that price tag, like if Google came out with that, forget it. No one's buying that
The
thing.
reason it doesn't matter is because Apple can release, electric helicopters tomorrow. And the fact of the matter stands that every year Apple is the biggest purchaser of Apple stock.
But think about this.
Their buybacks are so massive.
So massive, $20 billion a quarter. They buy back more than a freaking $1 billion a week in shares. It's disgusting.
So
Amazing.
right, like they can come out with horrible news.
Remember,
People will be like, "Oh, I'm not buying Apple," and then
They
Apple,
don't fail. They revolutionized phone. They made tablets. They revolutionized computers, arguably.
Mhm.
And then when you think about services, they built a business from the ground up that is on a run rate to generate $100 billion in revenue in 2025. They don't, whatever they touch, they don't fail.
Yeah.
Look at the iPod.
Unlike Google.
Yeah,
Wait.
I mean, look, I'll say it, but Google generates a ridiculous amount of money also.
For now.
Guys, you can say it for literally all four of them: Amazon, Meta, Apple, and Google. Like they're impeccable businesses with impeccable products. The fact of the matter is that I'm just trying to make an argument that Apple's buybacks make an outsized difference, at least historically. So
Huge
because
difference.
now the narrative is like, well, Apple's not actually growing that much. Their products are going stale. The what do you call it? The product renewal cycle every 4 years or whatnot for a phone and
I
MacBook.
think people are going to be surprised next year when the iPhone 16 comes out because of the AI that they're going to have in there. I think people are sleeping on Apple.
So that's
It's
the
going to be
thing.
an AI dark horse, and it's going to be very interesting to see what they say in the summer.
Well, so that's the thing, right? Like AI and Vision Pro are the lifelines, period. End of story.
And I can see Google, the Google Pixel is a very good phone. Like that's one thing that they've done well. So I can see that being a good vector for Google, but it's such a small part of their business compared to Apple. So, there's parts of Google that I like, but they are not they're not comparable to the other companies you mentioned. They're just not. They've had so many flops. Tim Apple, if he was Tim Google instead, which I think he's not, an amazing CEO compared to the rest of Mag 7, except for Sundar Pichai, but Google would be in a lot stronger place because they would actually execute on things, even if it's slower. Maybe they wouldn't be the leader, but at least they'd be releasing credible products. Instead, what they're releasing is just very mediocre. They are not the Google that they IPO'd at. They're a completely
I almost
different
want
company.
PayPal to stop buying back shares at this point and just pay a dividend. Yeah, I said it. I don't care. It's over.
You said it.
It's over. Dividend. It's over. Like they should pay a freaking dividend. We're wrapping anyway.
That doesn't mean it's over, Steve, just because we're
Over.
wrapping. I said it in like the first 2 minutes.
Charity, your choice.
Charity,
They need to pay a dividend. PayPal is so screwed right now. I mean, this guy did not instill any confidence in anybody.
Yeah.
It was a big problem. I mean, has he done one interview since the conference call? Has he gone on any networks and said anything?
Nope.
What?
It's radio silence.
Didn't he do CNBC?
Before First Look.
The shock the world.
And First Look, and then earnings, and then nothing. So, which that's okay for like right now, but like he realistically in the next month he needs to do some sort of interview. If he doesn't, if it's completely radio silence until the next quarter, that's not good. I've actually tried to. I've thought about getting the guy, and I might reach out. I saw somebody else got shot down just to do a Spaces interview, but that's not sufficient. Like he needs to go on CNBC or something.
Bring him on the channel.
He needs to be on Bootleg Weekly.
Bootleg Weekly.
Yeah, I can just imagine that ask. Hey, CEO of a public.
Yeah, for sure. Do not have me on with that guy.
Well, first of all, we can't name it the fucking Bootleg Weekly for him to come on. The PR team would like have a fit.
Yeah.
No, but I mean, listen, as a shareholder, I'm pretty angry
As you should be.
because this is a company that you need a wartime CEO right now. Like you need Anthony Noto running this company is what you need. And I get it. This guy's got a great resume. He's done a lot of good things, but maybe he's a more fit for a COO role. And maybe they need an Anthony Noto to lead the ship because he would not have gone on that conference call and did what he did. And most likely the stock would have responded to what Noto would have said, especially with this set of financials and what they've been doing.
Probably, but we also see how the market treated SoFi. So the market's going to do what it wants. But
The difference
the initial
is SoFi is in a much different position than PayPal.
Here's the thing with PayPal, and it doesn't really matter at this point. But
No, it doesn't.
what they actually did, as far as numbers, was phenomenal. Maybe a step under phenomenal, but really,
it was
really
great. Let's use the word great. Great quarter.
The guidance, that was one big misstep. The slide, a couple of things that he worded and said. Minimum 5 billion in buybacks. I can't remember the wording exactly on that. There's plenty of missteps, plenty of learning opportunities. He is an operator. He is an executor. I have no doubt that he's going to deliver good results. The question is, will the market actually care? That's what we don't know, and that's a big question mark.
I'm not questioning him being an operator. I think that he's going to do great things at PayPal. The question is, does the market respond, and does the right story get told? That's the big question right now.
Dude, but this shit matters because how much rope are you going to give PayPal, right? Like how much slack are you going to cut him? You essentially were like, oh, wait, well, Shulman is going to be out. So we got to wait for the new CEO. Let me hold it for another quarter. Oh, well, it's actually the first quarter that the CEO has been here. He doesn't have an outsized influence. Let me hold it for another quarter. Right. Oh, well, this is the first quarter. It's like,
I still stand by classes. I stand by what I said the day of earnings, and I'm going to echo it. I truly believe this guy should have came out, made an emergency call to CNBC after getting the board on the phone and said, listen, market doesn't believe us, fine. Bet against us, see what happens. We're dumping $5 billion tomorrow morning on buybacks. In addition to the $5 billion, we have the cash on hand. This is how confident we are. You would have seen that thing go to 75.
Yeah. And look, I know that there's an appetite for it because the moment he put out the Shock the World event, the stock immediately went to 65. And so it's so starved for some positive news that this guy needed to go out aggressively. Instead, he's just taking his sweet ass time. And really, it doesn't translate well with the market because all it sounds like more empty promises that we had with Shulman that we're now getting with him.
Well, no, not at all.
Because on quarter three and take it private.
On quarter three, he made
like Roy, yeah.
On quarter three, he made 3 promises, and every single one of those he delivered on. And they even exceeded it because the margins inflected in quarter 4.
Yeah,
he absolutely
did. Lower guidance?
Pardon?
Didn't they lower guidance for this year?
They did lower guidance going into quarter 4.
And I don't think the guidance is that bad. I think the guidance is fine.
Why are you, the new CEO coming in, playing it so defensive? Do you think the market is just going to give you another 12-month grace period for you to knock it out of the park?
And that's my problem with
it. Here's what happened. He came out, being aggressive with first look. Not being as clear as he needed to be, and people would have misinterpreted it anyway. With Shock the World, they thought one-time event. He did not mean it that way. It's the first look at what will shock the world. But there was a lot of lashback, and he listened to shareholders, including myself, that said, "Hey, under promise, over deliver." He knows this. He's like, okay. He did that to an extreme, which is not great. So it's okay to be like a Noto and have a little bit cautious guidance. I think maybe Noto needs to step it up a little bit, but Chris did it even more so where it looks like there's no growth. So I'm going to give it 2 quarters. If they execute and they keep executing like they did in quarter 4, I have no problem continuing to hold. But I would like to see them actually begin to, of course, upgrade the guidance like Noto would do and actually project for the rest of the year once they have a good idea of what the first look products will do. So, if they don't do that, in 2 quarters, I will be gone. I will begin to look for an exit for the position and exit quickly.
Okay, so 2 quarters, you mean by Q3 or by Q2, one more?
So Q1 and Q2. So if there's no growth Q1, no growth Q2, they're missing, they're revising down, and there's not a good reason for it. If there is, they're X, Y, and Z, but this will happen. fine. But if not, I'm like,
Yeah, I just think that the company is naturally going to rebound because the margins was the biggest issue, and the margins are plateauing and actually going on the up and up. And that's definitely bullish to see. It's just the sentiment of this guy. He need to assert, a strong, aggressive stance to address the short selling, to address the stock drop. And, like Steve said, like, go in there hard with buybacks with your plan, and don't say like, oh, we're going to shock the world and then give me like a new fucking Venmo feature, like.
I mean, look at this chart.
They were good.
We're at 2017 levels. 2017.
Right.
Okay. 2017. Let's see how much revenue and profit. 2017. Oh, 13 billion. And now we're doing 30 billion. I mean, you've more than doubled your revenue. This is Cisco all over again.
Right.
I mean, it's legitimately what this is. They generated 419 million in net income, and now they're generating 4.2 billion. This is Cisco all over again. The market doesn't believe them. They think this is a dead company. And when you look at what Cisco's done over the years, they have consistently just made more money, generated more free cash flow, increased the dividend, increased buybacks, and the market doesn't care.
At the beginning of this pod, I was talking about concentrating into 5 positions. The reason why is because half the portfolio is dead money. This shit has been dead money for 7 years. Yeah. If somebody bought it in 2017, it's still at 2017 levels.
Yeah. I mean, look, I bought in I'm pretty much even right now. My average is around 58 or 59. I don't know. It's somewhere around there. The only reason I'm up is because I'm selling cover calls, but this is not a company that's paying me. If this company was paying me instead of buybacks, right, I'd be more okay to hold this for 5 years and wait.
That's exactly my point too. Like, I could just add it to my distribution portfolio.
If you're going to, instead of doing buybacks, generate a dividend, I think people will take that very seriously because you've already bought back. When you look at the amount of shares they bought back, I think it's something like $19 billion worth of buybacks in the past 6 or 7 years. I mean, but there's no reason to do any more at this point. The market doesn't care.
I think at that point, you're just admitting defeat in terms of like, you are accepting that you are now like a laggard, or you are a giant established company that's going to entice investors through cash flow that you're giving them. Whereas up until this point, they're still trying to rebrand themselves as a high growth company and say, oh no, well, we have Braintree, or oh no, we have Venmo. And it doesn't matter that the core PayPal brand is a dinosaur that doesn't grow because of these new growth vectors. And issuing a dividend would essentially go counter to that narrative to say,
I would disagree. Look at Meta. Meta is still a high growth company, and they're implementing a dividend.
But they did it from a position of strength. So if you want to do a cash disbursement, I think it matters when you do it and how you do it. So here it would be in a position of weakness for PayPal.
But is it? They're doing $5 billion in buybacks. Take $2.5 billion and give it to the dividend. $2.5 billion to buybacks. It's still the same capital allocation program. It's just going somewhere else.
I don't think they can do it here. I think if once the stock, and I think that it is a once, not a if, rises above 100 again, then they can look at doing that. The triple figures, a psychological level. People see that some of these first look products are having a meaningful impact. It's not just a Venmo feature, Tevis. There's some really good stuff there. But
what needs to happen for this to get to 100? Like, realistically, what needs to happen at this point?
They need to actually see the first look products continue to accelerate. Branded. If branded begins to accelerate, margins improve. The free cash flow improves. They accelerate buybacks, and then they improve guidance, and it's 100. Easy 100. It's not guaranteed.
I mean, I hope so.
Those products are really good. Though I don't know about all of them, but I know like 4 of them look very, very solid, easy to implement, and inexpensive.
I mean, I'm going to give it a year because the cover call premiums are pretty good. If it starts going up again, if it somehow gets past 75 or 80, I'm still going to hold them. I'm just going to write monthly cover calls or bi-weekly cover calls. Mm-hmm. I mean, I've always said I think that I'm playing this to 110 that I'm exiting, but maybe at that point I'll buy long-term puts and I'll just keep writing call options to manufacture income because it is a good percentage point.
Yeah.
I agree with this statement. Like, it's a risk for him to milk the honeymoon period, because he's setting himself up to.
The market's not giving him a honeymoon period. The stock's down.
Well, look at Roy. He's giving him 2 more quarters.
That's
You're
different than the market. That's different than the market giving him a honeymoon period.
But he's delivering is the thing. He delivered on everything he said in Q3 from Q4. So I'm
the numbers were good.
I'm going to focus more on what they actually deliver versus what they say, because I've made the opposite where I've flipped that. And what they deliver is very, very meaningful. So if like in Q1, they don't improve guidance, but the margins continue to improve and branded accelerates, I will probably add at that point, honestly, because once, it could be a fluke, whatever. Maybe it is, even though there's some seasonal factors that actually should have depressed margins. But twice in a row, like, okay, I can start to see the trend here, and I don't have to be a genius to figure that out.
Yeah, I agree with that. Look, if next quarter is good and this goes down again, I'll probably go in heavy, because at some point, look, dead companies don't grow. This is still a growing company. That's the biggest thing. And I think that's why it's so annoying.
Yeah,
because
the guidance. Yeah. I mean, we all agree it was idiocy. Like, just, it was.
Like, the numbers don't make, this is another one the numbers don't make sense on.
So, just to piss Steve off.
You want to talk about Baba? That's fine.
No. I want to talk about this. What do you think of this, Steve?
I don't want it to happen, but I think it's a good possibility that they get acquired by somebody.
Bro,
I think Goldman. Look, if you look at what Noto did in his past life, you look at the board member who was the ex-COO from Goldman's on the board.
Yeah, he's got the connection.
There's so many ties to Goldman. It would not surprise me if Goldman acquired them. I don't want it to happen.
I mean, I don't want it to happen too, but 30, give me 30 today. I did the math what the gains would be if we hit 20 and I had 100% SoFi portfolio, and there was many zeros behind that. So if you give me 30,
but hold on. If this is a stock that you think can become a top 10 financial institution on its own in the next decade, why would you want to sacrifice that now for immediate gratification on 25 or 30?
Opportunity cost, very simply.
There's a lot of deals out there, man. There's a lot of good deals.
I get it, man. But like, what again? I think we circle around the same fucking topics, guys. It's like, if you give me a 5x tomorrow, I will happily take that and run. Like,
that's not a 5x.
It's more. What are we
from
at?
Where we are today to 30? We talking about?
Okay, fair.
3.5x.
Sure. Okay. Even still, a 3.5x. Give it to me. I will take it and run, and then start to allocate into stuff that.
Okay. But do you think, if your thesis is that this is going to be 100 billion market cap in the next decade?
Yeah.
Okay. That's an 11x from where we are now. Okay.
Yeah.
So let's just say that you got your 3x now for the $30 price, or 3.5x now. Where are you putting that money to generate the extra 7 or 8x on top of it?
One out of the other 5,000 fucking stocks in the market.
Well,
number one. Number two,
Google.
You wouldn't even have a choice, man. If Goldman bought them out, you would be out.
100% I'd be out. Doesn't mean I have to like it.
I don't know what we're debating here.
I'm just saying that I don't want a $30 buyout. I am in this because I think that this has so much more upside potential down the road that I don't want to buy out.
Yeah, and then you roll a 7, and then that's what happens. Like, very simply put, like, I just think that, even still, like, if I had my entire, I'm not going to say this actually because it's going to trigger Roy, but if I had my entire portfolio in Palantir and it went from 8 to 25, you better know I'm taking at least some of it.
And I think that that's why I'm looking at this much differently, because I'm so diversified that I am wanting to be in this because I see so much more potential down the road that I don't necessarily need a 3x to change anything.
No, a 3x won't like drastically change my life too. It's not like I'm going yacht shopping for a 3x. I'm just saying you won't have a choice in the matter. If
no, of course not. Doesn't mean you gotta like it.
Sure. I'll not be too sad. I mean, there's a lot of opportunities out there. I do want to have this as a long-term position and see the day when they actually have cash disbursements. But yeah,
oh
it's
my
ways
God,
out.
If SoFi ever pays a dividend, Jesus Christ.
They will. They're mostly a bank stock, and they'll always have that bank element. They will at some point. I can.
Travis, just think about moving all your SoFi shares to your dividend portfolio.
Man, I'm just thinking about I'm just fantasizing over here, like stock split and then dividend on the split stocks.
If they start paying $1 a share,
yeah. Oh man,
Yeah.
Stop it.
Those shares that you bought for like $8-9, you're like, oh man, I maybe bought a little bit high. Who freaking cares?
It goes up to 50 and it does like a 5-for-1. And then they were like, oh, we're doing a dividend. It's going to be great.
So I give Cisco a lot of shit. Okay. But long-term investors for Cisco have done so well. Have you ever seen the amount of stock splits that they've done?
Cisco?
Yeah.
No. But it's like, yeah, they've been around for fucking how long have they been around, Steve? Like 100 years?
Hold on. I got the table for you because I made it.
Of course
it's freaking amazing.
This is why people call you a boomer, okay? Because you make charts for Cisco.
It's not a chart.
I don't care what you read.
Show this. Since 91, if you had 100 shares in 91 and you still had them, you'd have freaking 28,800 shares now.
Jesus, this is so crazy. Their last stock split was in 2000?
Yeah.
What?
Yeah. Look how many times they split their shares in the 90s over that decade.
Steve, the last time Cisco had a stock split, I was 6 years old, bro.
And think about this. Look at their dividend.
You got a typo there, I think, Steve, if that's not published yet. 3/8/22/2000.
Oh yeah. This has been published for a long freaking time. Okay. But 28,800 shares and their dividend.
What's their dividend?
Is $1.60.
Oh fuck!
Filthy.
Like
money.
what was
really think about that. How crazy that is.
I get it. This is why all of these boomers have all of this
are generating so much money in dividend income.
Absolutely, man. They're just getting all of this passive income.
And that's not including all the dividends that were reinvested over the decades.
Yeah, absolutely. And it's like, well, I can't help the fact that Cisco was fucking founded like 50 years before I was born.
I mean, look at those splits. Look at all those splits there, and then look at the dividend growth. Okay, this is, I hate to say it, but this is what PayPal's fate's going to be without the splits of the freaking dividend.
Bro, I will be long in the fucking ground, Steve, when PayPal achieves this, man. I'm sorry to tell you. Like,
You're a young man. What are you talking about?
Warren Buffett, he talks about buy and hold for the rest of his life. Like, he started buying his first thing when he was 11.
Dude, I've owned Meta for more than a decade.
So, on Buffett, I have doubted the PayPal rumors for a long time. It does seem like it's a financial stock. And what's interesting to me is I was trying to think of the reason why he might keep it silent. It's not just to add and not get the market too hyped up. Oftentimes it's to acquire a company.
I have a theory.
It's not going to be SoFi. I hate to burst people's bubble. It's not.
Sirius
No.
Satellite radio.
It's a financial company.
It could be PayPal. I'm maybe like 20% that it's PayPal.
It's probably going to be some boomer shit, man, like Ally or something. I think he already owns Ally.
He already owns Ally.
Yeah, exactly. And so here's my problem with that. Why is SEC even allowing this? Like, how does he get preferential treatment?
Dude,
Why?
He's Uncle Warren. Are you kidding
Warren
me?
Buffett.
I don't give a fuck. There's so many other legendary investors out there that don't get preferential treatment.
You realize that when the banks get in trouble, he's the one they call, not Jamie?
But they call Jamie too.
They call Warren first.
So in the United States, we have what's called the rule of law, but there's a rule that goes above that, and it's the rule of money. That if you have the money, you can write the rule of law or rewrite it. That's it.
I'm just saying, man.
And is Berkshire not the greatest stock to own?
See, that's the thing. That's the route you should have taken when you were like, buy an ETF, long term, all this stuff. You should have been
that's fair.
Sell everything.
Buy like 2 shares of Berkshire. That you're getting a $4 billion stock portfolio with operating companies on top of it that generate like $80 billion in free cash flow. It is crazy.
Do you think a
$350 billion stock portfolio that's generating 4.6 in dividends?
Do you think when Warren passes away that Jamie and whatever the other lieutenant's name is, that they're going to actually breathe some life into the portfolio, or is it still going to be like boomer stuff?
So you got to remember, this guy, he ran Berkshire Energy. So he's very in line with how Buffett thinks. I mean, he did get them to do some moves that were non-traditional, but maybe, I don't know. But he's an energy guy. I think they'll buy Energy Transfer or something like that.
Like outright?
Listen, if you really look at what they did with the Dominion deal, they spent, I think, $9.7 billion acquiring 7,700 miles of natural gas pipelines back in 2000 because it is just cheaper and easier just to acquire them. And you look at their energy assets and you look at how much of Oxy they own. I think that the two pipeline companies that they would consider purchasing is Kinder Morgan or Energy Transfer. Yes, owner stuff, yes.
Yeah. But I saw this post earlier today around the dividend payments for
Berkshire
companies. And if you ever want to like feel depressed about your life, just look at that.
Oh, hold on. Give me a sec, because I have it for you.
It's
so disgusting.
When you're getting billions, every quarter off of dividends, it's just like, GG, you've won. Just quit.
Oh, yeah. Dude, but it's Uncle Warren.
It's Uncle Warren, baby.
B.
I kind of want to buy just one share of Berkshire so I can go to Omaha at the convention and just meet all of these rich boomers.
And I'm going to plug my Seeking Alpha. You can find all this I'm showing on my Seeking Alpha.
Oh my God, this guy.
Apple.
You're the new Tanner. I hope you know this, Steve. You're the new Tanner.
I mean, look at the dividends. Bank of America pays him almost $1 billion a year in dividends. How crazy!
You don't have Apple on here.
Yeah, no.
Where's Apple?
It's in between Bank of America and Coke. It's this one right here.
Apple pays him I guess the yield is like 0.5%, right?
Yeah, he owns so much of it, pays him like $800 or $850 million a year. It's just I couldn't fit everything on the chart with the names. It's crazy.
Yeah.
Just insane.
It's absolutely crazy. Yeah, it was undervalued. He's buying the Permian. I mean, that's why he was buying so much. I'm still not convinced he's not acquiring the whole company.
Okay,
no matter what he says.
This is the second quarter now. I think it's the second quarter that he has had special treatment from the SEC to not disclose. Mm-hmm. How long do we think this goes on?
Probably a couple more quarters.
Really?
When I looked it up, I don't remember exactly, but I looked at some of the past instances, and when he's making a move to acquire a company, then that can last. I think the longest I saw was 1.5 years, but typically it's a little bit shorter than that. I would have to re-look at that.
I mean, this balance sheet's crazy. 30 billion cash, 126 billion short-term investments that he probably has in 0 to 3 month T-bills. And then he's got another 368 billion in equities and long-term investments. I mean, this guy is just
Oxy was his biggest ad this quarter, right?
Something else. He had a lot of Oxy.
But yeah, I think the longer that this goes on, the more likely it is an acquisition. Because I mean, you can load the boat, a couple of quarters, but if it goes like 3 or 4 quarters, it's an acquisition all the way.
Okay, so keep me honest here. The rule is over 5% you have to disclose, correct?
10, I think.
Okay, 10, even better.
I'm not 100% sure. I thought it was 10. It could be 5.
Meaning that. So yeah, we can confirm, but let's just say it's 10.
It's one of the two.
For the past 2 quarters, he's owned over 10% of a financial company, and he's still accumulating for the fact that he's still keeping it secret.
Yep.
I mean,
it's an acquisition. I'm like fairly certain, and it may not be. Like I'm only 20% sure it's PayPal. There's other names out there as well.
I think it's going to be Gold. It'll be Goldman.
Wow, really?
Yeah, he owned Goldman at one point. He sold it, Goldman pays a huge dividend. It's trades at a good valuation. There's not much reason not to do that.
That'd be huge.
I mean, really look at GS for a sec. I mean, I was thinking about buying some. They pay a freaking almost a 3% dividend.
Really?
And this stock bottomed at 296. It's at 384. People may be thinking that this is the one he's been buying. Who knows?
Yeah, like I could believe that it's some large cap. I don't think it's a small cap because like he doesn't need a full 3/4 to buy out SoFi, bro. It's $8 billion.
Yeah, that's the interest on his freaking T-bills.
Exactly. So it's gonna be something big, but he also already owns Bank of America, so I don't know. Like,
yeah, but Goldman's market cap is 136 billion.
So he just wants to diversify into investment banking. Is that the thesis?
Why not? I mean,
no, I get it. I mean, but
he already has Citigroup, Bank of America, and Ally. Why not get investment banking there?
Man, I can't remember the name of it, but there was one kind of for the same reasons. They own Geico, and it was a commercial. Starts with a C. The ticker number C. I was thinking Chegg, but the Chegg is not it.
What, like an insurance company?
Yeah.
What was it, Cincinnati Financial or something like that?
No, that's not it. Can't think of it. Aflac's another possibility too. Heavily in Japan, but I don't think so on that one. It's smaller. But no, it's. I would be shocked if it's not an acquisition. I don't.
Berkshire has over 100 billion in cash, right?
Yeah.
What's Goldman's cap? Like 200 something?
136.
Really?
And Berkshire has how much in cash? 157 billion between cash and short-term investments.
That would be funny. We're talking about Goldman Sachs acquiring SoFi, and then they get required.
Yeah, it's just like I don't know, man. I can't fathom Berkshire making a move on Goldman for that large an amount. Like I could totally see him buying like 20% stake or something like that. But again, that's why I asked you guys, like, how long do you guys think that he's going to keep this private? Because it just
look how big his insurance business is. I mean, this wouldn't shock me one bit when you look at how big Berkshire Insurance is. It wouldn't shock me.
Man, I wish I could remember
Of course,
that.
he probably wants to do one more deal, like one more big deal to feel alive.
That's so fucking depressing, Steve.
No, but seriously, think about it. The guy's had a wonderful career. He probably wants to do one more big deal. Like think about it. Munger passed away, God rest his soul.
Yeah.
And that had to have made him think he's only got so much time left and it's limited. The guy's 92.
He was getting special treatment from the SEC when Munger was alive. What are you saying?
No, but that's not what I'm saying. What I'm saying is with Munger passing, he's got to be thinking, I only have 10 years at best. More probable is probably a couple. He probably wants to do one more deal because he loves it. I mean, why wouldn't you? It's like somebody playing their Let's Football or baseball game.
I will eat my shoe if Warren has 10 years. I hope it happens, but I think it's like less than 5, man.
Maybe he has it figured out. He figured out all the foods he wants to eat when he was like 6 years old. He's doing pretty good.
McDonald's breakfast and Coca-Cola lunch, breakfast and dinner.
Amazing. Oh my God. Amazing.
DGen diet.
Guy's a pillar of health.
Yeah, I don't know. I'm curious. I know people online are like, oh, SoFi. So it's not going to be fucking.
I doubt it's going to be SoFi.
No, there's no way it's SoFi.
It's way too
I don't think it'll be Verizon. He's owned it in the past, and it's not a financial stock. Yeah, there's a chance it's not a financial, but it's very unlikely. Like it pretty much has to be. It's like 90.
If it's a finance company, I really do think it's going to be a Goldman. It's not going to be. I don't think it's going to be a bank. I think it would be an investment bank.
MS. Morgan Stanley.
Morgan Stanley could be interesting,
right? Because if we're going into the iBanking space, then I think
those are the two, right? Goldman and Morgan Stanley.
Fuck, I hope it's Morgan Stanley so they can pump my bags a little bit.
And yeah, roughly the same market cap, 140 billion.
Right? I don't know. Anything else you DJs want to talk about or no? We got 190 people here.
I mean, we got to revisit that Google conversation maybe next time.
Let me see. What else did I have on my list? Maybe we can see if we can just super quick.
Pinterest. We can make fun of you for Pinterest. Like why?
Ooh.
So I'm curious on that because you
Mhm.
said you're going to go down to 5, and Pinterest is one of those. And like the other ones, like they make sense. Pinterest though, like what in the world?
Yeah. Do you want me to give you the super quick thesis on Pinterest?
Quick and dirty.
Quick and dirty. Okay. Pinterest has a ton of data. People have mislabeled it as a social media company, but it's more as a visual search engine. It's more comparable to Google than it is to Twitter. Okay. Why? Because of the searchability. If you go on Google, Pinterest searches come up at the top. They're tagged. They play the algorithm, for Google so that they can be searchable. And the other thing is intent to purchase. When people go on to Pinterest, they have a high intent to purchase. I think the intent to purchase is like the highest out of any platform out there because people actually go there to shop. Like if I'm going to remodel my living room, I'm making mood boards on Pinterest. And the cool thing is now they have products that are embedded into the post themselves so that I can take a look at this couch on this Pinterest post and I can buy that exact product on Wayfair or on Etsy or wherever else, Walmart. And it leads me to those external websites. So essentially, Pinterest is think of it as like a landing pad or a launch zone as an intermediary to take you to the actual e-commerce sites where you buy the, let's say in this case, furniture for your living room. Now, the thing about Pinterest is like, yeah, obviously they got killed in 2022 because ads sucked. Nobody was, having ad budgets because people were like laying people off. And so the idea is that it's on the rebound. Pinterest, the opportunity is really with regards to monetization. Their monetization is like horrendously low when compared to something like, a Snapchat, a Facebook, a Twitter. I think Facebook is like $8 or something. Like the core Facebook brand, and Pinterest is like $250. It's ridiculously low. Now, the cool thing is they brought in a new CEO. So their founder moved up to the board. They brought in a new CEO from Google. And over the past year in 2023, Pinterest made a partnership with both Google and Amazon so that their posts, like for essentially ad space, right? And this is really, they're seeing initial, like really positive results. Their revenue is accelerating. Their member growth is accelerating. Their operating expenses are all decelerating. Actually, let me see it. I think I might have it up because I was looking at this last night. Hold on.
Pinterest or Snapchat?
Pinterest. One sec. So let me throw this up. Super quick, right?
Mm-hmm.
So revenues going up, right? We had that like hangover year, right? When nobody was spending on ads. It's going up. Monthly active users is going up. Average revenue per user is going up. You can see the opportunity here in global. Rest of the world, non-existent. Europe, non-existent. And look at this. All the expenses are going down. They're profitable. And these partnerships, it's essentially you're betting on the ad industry going forward. As rates get cut, more budgets are allocated, more of that is going to, go into ads. Number one. Number two, you think about like, I know a macro case for Facebook is the elections that are coming up because a lot, of ads are going to happen there. The idea is that the ad industry as a whole on like a secular growth pattern is going to be a winner over the next 5 years.
Sure.
When you have Pinterest that is having a partnership with both Google and Amazon for the ads, those are really good partners to have, number one. Number two, in 2021, they did a partnership with Shopify where essentially now they're moving into more of an e-commerce space where you can actually buy this shit straight from Pinterest. And instead of Pinterest gaining like an affiliate bonus for referring you over, like they can get a bigger slice of that pie. And so essentially, quick and dirty version, that's the bull thesis for Pinterest as a rebound play from 2021, 2022 period.
Yeah, possibly. Like, why not? So let me give you some pushback. Why
Sure.
not just invest in either one of the others that you mentioned, Facebook or Meta in this case, or more in Google rather than this? Or something like the Trade Desk, which I mean they killed it again. I've
Killed
had
it.
them on my watch list, but they're
So-
amazing.
One thing that I really like about Pinterest, let me actually pull it up. One thing I really like about Pinterest is that, they're like a 20 billion market cap right now. You always embedded into this play have a call option on the potential for this company to get acquired. They had that M&A activity from PayPal that I know that you hated, Roy, way back when. They also had interest from Microsoft, and they also had some rumblings from Google as well. And so now that they have these close connections, I think Google honestly would be perfectly synergistic with Pinterest. Why? Because Google is already the biggest search engine in the world from a text perspective, and Pinterest has a corresponding data set from an image recognition perspective. So they already have all of this data out there. I think they would be really synergistic. But I mean, Google right now is focused on how are we going to climb the hurdle that is OpenAI, and not really focused on the ad space in general, because people the way they search is changing. But my point is like with Pinterest, you always have that embedded. Bill Reddy comes from Google. He was an SVP at Google before, and he was on their commerce division, if I'm not mistaken. So he was already doing e-commerce stuff. He's moving the company into that direction. Really great CEO. And so I honestly think that M&A activity that we had in 2020 for Pinterest is going to return again as this company is more and more into the limelight.
Yeah, so it's a question of monetization. And me personally, I'd prefer to be in the Trade Desk, even though it's very expensive. It's well run, and I think the ad business will do well. So I don't think Pinterest will do bad, but the other part of it too is PayPal, and somebody mentioned it right there that it sounds similar to a PayPal pitch. I mean, that was heavy in those first look products, that there was multiple advertising vectors that were going on right there. And it's a question of being able to monetize their data, which they have phenomenal data. And so with Pinterest, you have what they click on or what they get their attention on versus what they actually pay with PayPal. So I prefer the Trade Desk or PayPal over it, but it doesn't sound bad. It sounds better than I was going to give it credit for. So,
You know what I'm buying, Tevis?
What are you buying, buddy?
Boxes of Evolving Skies.
oh man. By the way, I thought of the stock. It's Chubb. Chubb is that insurance company that I was thinking of that is commercial. I don't know much about it, but I know it's been heavily talked about, and it makes a lot of sense if he wants to really corner the insurance market more, along with what Geico does. It basically does everything that Geico does not do, and so that's a good, strong candidate and pretty well-run company from what it looks like with just surface level. CB is the ticker.
Yeah. Heinze, we talked about Unity earlier in the stream, so just rewind. We talked about OpenAI and Unity and the
I'm
opportunity.
going to look into buying some Hasbro.
Such a fucking boomer, dude. I swear to God. Hasbro? Why?
Yeah, why not? Why not?
I
They're-
mean,
Are
They're
people
one of the
going to stop
organizations.
having babies?
well,
they're
just
one of
fucking go ahead and buy Disney then, if that's your thesis.
Are kids going to stop wanting toys?
Go ahead and buy Disney if it's the IP.
But Hasbro owns Magic the Gathering.
Okay, now we're in the real reason why you want it.
And they have the licensing for pretty much all the cool toys, I guess.
More
Dude,
exposure into playing cards.
I had a lot of MTG cards back in the day, revised edition and all.
Roy, do you still have them?
My wife made me get rid of them, sadly.
Did you have a Black Lotus?
I did not. I had a friend that had multiple.
Thank God. Because if you had a Black Lotus, you'd be very upset right now.
Oh no, yeah, I know that those things, like even back in the day, they were worth a lot. I had this guy that owned, he had this big trench coat, and he had ferrets that would like run around like in the high school, and he had a Black Lotus and a couple others. So
Here you go, Steve. Answer that.
Hold on.
Actually, don't answer that because now we're going to go into a Hasbro.
As
round.
of lives, Toys R Us shut down. Children live on their phones.
they still play with toys, so
Yeah, but Hasbro has digital content. They got a lot of stuff when you really start looking into them. 7 billion market cap, 5.5% dividends. Dividend may get cut, who knows? But look, I'm looking at the numbers right now. 5 billion revenue. This year they lost money, a lot of money. I gotta look into that. But on a net level, but on a free cash flow, they're generating about 500 million in free cash flow. I mean, I got to look into it. It's interesting when you bring up the quarterly report and look at what they have for IP.
So I looked into this, who makes Legos, Lisa, and it's actually private. And I wanted to just go super heavy on whoever makes Legos because apparently white women love to play with Legos, which is what I recently learned. And I didn't know this. I thought Legos were for kids, but then I looked at some Legos and they look cool as hell.
I know quite a few people that build Legos.
There's a problem though with that thesis. So people, the medical system's getting better with Ozempic. It actually helps with diabetes, and their recommended their playing is for 9 to 99. So when people hit the triple digits, they can no longer play with Legos. And so,
okay, you're being sarcastic.
Yeah.
I was like, how the fuck does Ozempic play into Legos long pieces? All right, that's how you know we've run out of stuff to talk about. Let me end off.
Hasbro owns Monopoly, guys.
I don't care about Monopoly.
Really?
Who owns Catan? Because that's the real. That's the
right.
secret.
Euro games.
Yeah.
I don't know, but
Z-Man.
for the year, Wizards of the Coast, which is Magic, 1.46 billion in revenue, 526 million operating profit at a 36% margin. Like, that's insane.
So I think now would be an appropriate time to plug Steve's channel. He talks about alternative assets on his YouTube channel. And yeah, I know what I said.
With baseball season's coming around, I'm starting to speculate.
I got rid of.
Steve, you have to make more videos, man. You tell people you're busy, and people are calling you out on it. You have to make more content.
Dude, I am so busy.
All right, go to your security box and then record on your phone you showing everybody what's in there, all of your Pokemon packs, and
yeah, I mean, going to my storage unit or going to my safety deposit box would be interesting.
Yeah, do that. I would watch that video, honestly. Where was I'm trying to find a comment. Basically, this person was asking, yeah, here we go. Let's end on this. Are we tanking tomorrow or pushing 875? We were green on a red day today.
How about does it matter?
No, it doesn't matter.
It doesn't. It's for fun. We're going up. SoFi was strong today. Fintech was strong today.
Like $11.
$11. No. I actually, yeah, I'm pretty, I'm usually wrong on these sort of things, but I think that we're going to see some upward momentum on SoFi. It seems poised. I've intentionally not been selling covered calls on SoFi just because I'm scared with how low it is, how low the premiums are that I get, and then the short interest. I'm like, I am not going to risk it. Not right now.
I'm in the same boat. I don't think I can go cover calls until it's at least 13, 14.
Yeah,
I'm
not doing it.
Now, how about this, guys? Tomorrow is Nvidia's day. Are we tanking? Is the market tanking?
Dude,
No.
I am fucking worried about Nvidia.
Mm-hmm.
I am very worried. You look at everybody's going, oh, dumping the CMI. Like, look what happened. Okay, at some point, these numbers don't make sense. Now, Nvidia,
it's fine,
is trading at an interesting level because you can make an argument that's cheap. I can make the argument that's cheap.
It's priced to perfection. Repeat after me.
No.
Priced to fucking perfection. It's
not.
Worth more than Google, man. In the short term, it is. People are expecting their revenue to just be like leaps and bounds above what it's. I don't know.
So here's where it's going to actually run into problems is when it really started running. Was it 2 quarters ago? That's when the year-over-year comps no longer start making sense the way it is right now. They're beating easy numbers and the revenue projection growth. I looked at it. I don't remember what it was.
I got it up for you right now.
It seems like that's a pretty easy hit. Eventually, also, some of these larger Mag 7 companies will begin to vector out and begin to work on their products.
That, Steve, go with yours because I want to actually present something.
Yeah, they're talking about doing 60 billion of revenue this year and 94 billion in 2025. I mean, that's huge revenue growth. But you look at earnings, you're talking about going from 12.5 to 21.5 on EPS this year, next year compared to this year, and trading at 27 times 2026 earnings. I mean, if Nvidia blows it out of the water tomorrow and you start getting upgraded guidance, all these analysts are going to be guiding upward, and this is going to be trading at 20 times 2026 earnings.
And I'm pretty confident. I'm not going to put money on it that they will. Next quarter, when they actually get into the guidance, that's where they might have a little bit of a problem.
So I think that the problem is going to be the unknown, and Microsoft, Meta, Apple, and Amazon are not going to take this line down. We already know that they're building chips.
Right.
Microsoft just came out and said they're working on networking stuff to wean their way off of Nvidia. Meta has been adamant about creating their own AI chips. We know Google's been doing it, Amazon's been doing it. Amazon's actually offering it to clients. So Nvidia could have a very big problem with that down the road. And let's not forget, the way investment cycles work for data centers is they pull everything forward. Once they're done rebuilding their data centers with the newest tech, you have a multi-year cycle that they have to depreciate the assets, and they are not really spending a lot on CapEx anymore. Nvidia is pulling so much growth forward that there's so much unknown that this could be priced perfectly or even undervalued today, but it could look extremely overvalued in a year from now.
Yeah, I just think this earnings is not the one to worry about, but I agree with that.
I agree with that.
Exactly. That's what I was going to say, but pulling up investing.com literally nukes my computer, so I can't do it. But Microsoft, like, obviously these guys are going to have a response to Nvidia. It's like Nvidia is holding them hostage in the short term. Like, I saw people making posts about like, oh, Nvidia sells $40,000 chips and they have 80% margins. It's like, yeah, no shit, Sherlock, because they're holding everybody hostage for those chips because you're at a place of desperation, essentially, right? Like, why do hot dogs and beers cost more at a stadium? Because you don't have any alternatives. There's no utility. They have leverage. But Microsoft, Google, Apple, all of these players, Meta, they're all going to be working on their own in-house solutions. They all have over 100 billion cash on hand. They all have some of the smartest minds that work there. Like, yeah, obviously Tesla with their Dojo project, they're going to be replacing Nvidia first, or at least augmenting some of that demand. And it's going to wane off. Like, AI sort of hit everybody like a ton of bricks, but it's not going to be something
The
that
real big winners going forward are going to be on the software side.
Mm-hmm.
Unity, baby.
You can only get so much out of the picks and shovels. At some point, it's going to be commoditized, just like DRAM cycles, just like x86 chip cycles.
Yep.
I mean,
exactly. And this is exactly, we come full circle onto my Unity bull case because they are building the software layer. So I don't know. I think Nvidia can still carry the stock market in the short term. I think the stock market is going to live and die by Nvidia's earnings tomorrow.
Yes. Yep.
I agree with that.
But long term, Microsoft, Tesla, Google, Meta, Apple, they're all going to develop in-house solutions. AMD is now coming out as a dark horse because people are buying AMD chips.
Don't talk to me about that.
Are they after hours, or they are, right? Nvidia?
What do you mean? Yeah, after hours on Wednesday, yeah.
Okay. Yeah, we might be flat to down before that just because people are worried.
Market's going to be down tomorrow for sure in anticipation of Nvidia earnings. Mm-hmm. And, we'll see. I think like even today's sell-off was a lot around, FUD around Nvidia. Like we saw it with SMCI. SMCI was down big.
Well, part of that's RSI too.
Sorry, companies aren't supposed to grow that much in a month.
97 on the RSI. Like, come on. Like, I don't care what you're doing.
Yeah, I mean, like if you see 97 on the RSI, you're kind of like asking for a drop.
You guys might have seen this, but I had somebody tell me that SMCI was a safer stock, and this was at its all-time high than PayPal. I was like,
there's no such thing as a safe stock. Let's be honest.
But yeah, if there's a least safe stock, it's probably SMCI at 1,000. Like, just come on. It's
probably one that's gone up 10x in the past 6 months that people may want to take profits on. Just saying.
Maybe,
Just saying.
Shall we wrap, boys?
Wrap.
Sure.
Ladies and gentlemen, I can't believe there's still 160 plus of you still watching us 2 hours later.
Did you know it was National Muffin Day?
Boomer.
Thank you.
How are muffins a boomer thing?
This absolute
I don't know. I use Microsoft Windows, and there's a picture of a muffin. I just went there and it said National Muffin Day.
Yeah,
Easy
millennials
recipes
just
for
get the
everybody.
tops. That's the cool thing.
Steve, people are like still so mesmerized by craps. They're telling you should start a craps YouTube channel.
Yeah, the bottom line is that if you have all the numbers in the point, you have a 66.67% chance of one of your numbers coming out versus a 16.67% chance of a 7 coming out. You have a 50% house edge. Hard ways are for suckers. Don't leave them working. Like, that's crazy talk. And use the mathematical advantage. Basically, depending on what point comes out, you back it up with a certain amount of odds. But the way that the 4 and 10 pay out, the way the 5 and 9 pay out, the way the 6 and 8 pay out, theoretically, based on that strategy, if 3 or 4 numbers come up, you're even. And then once you're even, you tell the box man to go up a unit every time. You will have a lot of fun.
And this is why we lost so many viewers the last time you were talking about this. Steve, Lisa wants you to meet her at Vegas and teach her craps. I'm
never going back to Vegas in my life.
Steve's like blacklisted from these casinos.
No. Why? Why am I going to get on a plane and go to Vegas? I can get on a plane, go to AC, and be there in 25 minutes.
Watch it.
Legitimately get on a plane and be there in 25 minutes.
AC is not Vegas, bro. Come on. I'm in Canada.
I'm not leaving the casino. I'm going to play craps. Why am I going to go to a different time zone?
It's 1 hour difference, and it's fucking Vegas, baby.
It's a 3-hour difference. One.
Look, my biggest flex. Okay, my biggest flex is I've been to Vegas twice, and I'm still in the black. Okay, I've left both times with more money than I think I was like up 400 the first time, and I was up like 500 the second time. Fantastic experience. So I have nothing bad to ever say about Vegas. Craps is hella fun, especially when you're playing with TJ and he has like fat stacks that he's like throwing down. It's a lot of fun. So I don't know. You go for the muffins. There you go, Steve.
There you go. I mean, listen, Caesars in Vegas is great, but I can do everything that I want to do in AC. I can go get my steak. I can play craps, have a drink, go to sleep. That's all I want to do.
Are you going to let me do the fucking outro now, or are you going to interrupt with muffins again?
I didn't know that there was an official outro.
No. By the way, do you love your intro? That was so much fun. I
thought it was good. Thank you.
Should I? Do you guys? Oh, I can't do it here. No, I can't. Do you guys want to see Steve's intro to Alternative Asset Weekly? I can play it. So let me know if you want to see it. And then that can be our outro for this.
Do it.
Should I do it?
Mm-hmm.
All right, everybody. This has been Bootleg Weekly. We are going to play the intro to Steve's Alternative Asset Weekly. If you have not subscribed to that channel yet, then definitely go subscribe to that. Thank you so much for watching. We will be back next week with another episode. See ya.
Ladies and gentlemen, welcome to
Alternative Asset Weekly. So yes, I'm crazy, and I actually did the data. This is from like 4 days ago. This has outpaced the S&P. So if you bought one of every box, you would have outpaced the S&P. Dude, I know nothing about Pokemon. I never played it, never watched it, never played video games. Know nothing about it. I know Charizard.
You're the biggest DJ out of us all, man.